Hey guys, it's Nick, and in this video, I want to talk about the latest inflation numbers. Now, we've been printing so much money, yet the Fed keeps saying that inflation is transitory. So the Fed has been saying this for a while now, and all the news media agrees with them all the time. But now that this new CPI data is showing that inflation is jumping a lot, what is the media coming out and saying about it? Let's take a look. So just to show you what kind of clown world we're living in this now deleted tweet, MSNBC attempted the ultimate gaslighting by claiming that the inflation we're seeing is now a good thing. Isn't that awesome? So it's so blatantly obvious that either they don't know what they're talking about or they are purposely lying to us. So much so that there's now memes about this. So Forbes article, May 1st, 2021, the inflation scare doesn't match reality. In other words, there's no inflation. Don't worry about it. Then June 26, 2021. Yeah, inflation looks bad now, but it's pretty much sticking to the script. So yeah, it's picking up a little, but we know what it's going to do, so don't worry about it. And so in this Washington Post opinion piece, they blame inflation on Republicans. Republicans are scaremongering about inflation to derail the Democratic agenda. And then Washington Post again, opinion, don't rant about short-staffed stores and supply chain woes. Try to lower expectations. Yeah, so if you're a mother and you want to feed your kid milk, lower your expectations and just give them water instead, right? And so here is the full descent into clown world by MSNBC. Why the inflation we're seeing now is a good thing. So when the numbers show that inflation is actually here, what do they say? It's a good thing. Don't worry. Americans have plenty of money to spend on higher prices.
Families of over 60 million kids on average getting $430 a month. For people on fixed incomes, older people on Social Security, they're getting those fixed payments adjusted next year up 5.9% for inflation. And the dirty little secret here, Willie, while nobody likes to pay more, on average, we have the money to do so. Household savings hit a record high over the pandemic. We didn't really have anywhere to go out and spend. And as we said a moment ago, we're expecting retail sales this holiday season to break records. For those who own their homes, the value of our homes are up. And while the stock market isn't the economy, you got over half of American households with some investment in the markets, and the markets have hit record highs.
So you see, they say inflation is transitory until they can't tell that lie anymore. And then they just say, well, don't worry about it. You guys got plenty of money. You've been saving up during the pandemic. Everybody's making money in the stock market. So who cares if prices go up? It's fine. You're making more than the prices are going up. So everybody should be okay, right? So let's see all that money Americans have been stocking away during the pandemic. So surely they'll be able to pay for all these higher prices, right? Here is U.S. personal saving as a percent of disposable personal income. Mid-price 7.5 around here. It spiked up to almost 35 in 2020, but guess what? It's right back down to 7.5, same as it always is. Well, surely people are making more money, right? Well, this is U.S. real weekly earnings year over year. It spiked up around 7%. Now it's actually slightly negative. So this chart refutes the idea that people are making more money so they can easily pay for these higher prices we're seeing. This red line is U.S. CPI urban consumers, and the blue line is personal income, wage, and salary disbursements. So you see, normally they're around neck and neck, and now the CPI is getting way ahead of the personal income wage line. So while the news has been trying to downplay the jump in inflation, let's take a look at the actual numbers. So CPI core year over year is green and CPI year over year is red. It's usually jumping around 2%, maybe 3%. And so it just jumped the CPI year over year to 6.2%, which is the highest it's been since 1990. So because of inflation in houses, vehicles, and large household durables like washing machines, refrigerators, and ovens, the University of Michigan buying conditions for these things has dropped to the lowest levels it's seen since the 1980s. So basically, things are getting so expensive that people are just giving up and not even trying to buy them. So with all of these things going up, is anything going down these days? Well, I found one thing. So now that the myth of transitory inflation has been busted, what do you do now to prepare for this? Well, for one thing, don't wait for the news to tell you that inflation is running rampant before you do something about it. Just like you would expect to pay more from a vendor selling umbrellas when it's raining outside than when it's sunny outside, don't wait until things get into a crisis mode. Now, I don't consider myself a prepper, but it's probably a good idea to stock up on food and other supplies that will most likely be more expensive in the future. So if you don't have a lot of money to invest, that's probably the best bang for your buck right there. But if you have extra money to invest, then there's other things you can do as well. And remember, none of these are the magic bullet, so spread your money around to different things. Now, people think real estate is the obvious answer in an inflationary environment, but that's not always the case. Real estate prices have been going up a lot in the last year or two, and so they may cool down a little bit. Not only that, but if interest rates go up significantly, then real estate prices could come down, since most people buy real estate not based on the price, but based on the monthly payment. So if mortgage rates go up significantly, that $1,500 that you allocate for your mortgage will buy you much less house than it does today. Precious metals always do well during inflation. So even though gold is up about $50 in the last week or so on this news, gold and silver have not had a really big run or made new highs yet. So if you don't already own some, get some now before the euphoria kicks in gold and silver and everybody's jumping over themselves to buy it hand over fist, because that is usually the sign of the top. So another thing that you can't create out of thin air is energy. And so energy stocks generally do well during inflation as well. So if you don't already have some energy stocks, you might want to look into that. Plus, they pay really good dividends. Speaking of dividends, there's a lot of other really good dividend stocks that do well during inflation, like food companies, consumer staples, and defensive stocks as well. So if you have a decent amount of money to invest and you spread it among all of these things, you might do okay during inflation. But if you are living kind of paycheck to paycheck with no savings or investments, it's going to be a lot harder for you. I know it's not a pleasant thing to think about, but that's the reality of the situation. So guys, if you like this video, hit the thumbs up and I'll see you in the next one. Thanks for watching.